So you want to get involved in property, but you got no money. Well, in today's video, I'm going to be breaking down exactly how you can become a multi-millionaire, yes, millionaire, net worth in property with none of your own money. You're going to want to watch it. So first off, let's talk no money down deals. Absolute bullshit. Like, I know so many people out there that, yeah, no money down, get involved. It's just marketing. So no money down deals, typically what people are talking about is rent to rent, lease options, exchange with delayed completion. And no money down is a great marketing term, but all of those involve money. So a lease option, the lowest you can put down is £1, but you also need to pay for legal. So let's call it £1,001 minimum. But also the likeliness of getting a lease option that doesn't require some sort of work. Even if the property is vacant, you're going to have the council tax, the water, the liability of it, but likely it's going to need some sort of refurbishment. The same as rent to rent or rent to SA, it's going to need some money. If a property is already working as a house of multiple occupancy, let's say on a rent to rent, and it's working perfectly, then why would they want you to take it over? It's going to need a bit of a tart-up. Maybe it needs furniture in the rooms, and I'd expect £5,000 to £10,000 per rent to rent to get you started. So instead of saying no money down, maybe it's better to say none of your own money down. Which brings me on to the two ways that you can start making money in property without having your own money. Number one is a passive flow. And a passive flow is when you are using other people's money to go into this. Now, if you don't know this, there's $1.2 quadrillion in circulation right now. That's including cash, derivatives, cryptocurrencies, NFTs, the lot. 1.2 quadrillion is a real number. It's $1,200 trillion in circulation at any one point. So there's enough money in the world for everyone to be a decamillionaire. Just somebody else has got your money. So the question is, how do you get it to you? Well, one way is by building credibility, raising finance, and putting it into your own portfolio. This is actually quite common. They're called joint ventures or loan agreements. The issue with that is you're trying to get people to trust you with little evidence or credibility behind you if you're at the beginning of your journey. So do you have something to offer them? Most of the time, this is going to become a lot easier if you've at least invested in your education. And no, I don't have a buy-to-let course to sell you at all, just the information that I'm putting on this channel. So what you do is when you invest in yourself, you get lent credibility. Somebody else's credibility, make sure they are credible, now goes into you because you've invested in a program. Does it make you an expert? Absolutely not. But what it does do is gives you a little bit of confidence in yourself, and your investor can do it. So why would they loan you money? Why wouldn't they just buy property themselves? Well, actually, a lot of people don't want the ongoing issues with property, a tenant not paying, any issues like that. But they do believe in the fact that it's as safe as houses. There's no safer investment than bricks and mortar, which is also true. And so they have the confidence of loaning money to you. Now, my recommendation is to not go all out on this. It's easy to go and raise $500,000, $1 million by putting yourself out there, building awareness of who you are, communicating with people, telling everyone what you do, putting the offer out there. And it's just very obvious. The more leads you get, the more appointments you get, the more consultation calls you can have, the more money you're going to get coming to me. It's just a numbers game, right? But don't go out there getting $500,000 and putting into projects when you don't have a Scooby-Doo what you're actually doing. Instead, find an opportunity that you think will work, run the numbers, and I'm not saying you'll even get that opportunity, but you'll get a good understanding of how much money you need, the likely return you're going to get, and therefore how much you're going to need to match up to this project. Go out there and find the money, of course, but you might be too late. That's okay. For example, let's say you need $50,000 to buy a £100,000 property and the fees, okay? And you know you're going to get 12% return on capital employed. If you don't even know what ROC is, you're probably not smart lending money. You need to get some investment in your education, understand. So return on your investment is going to get you 12%. Let's say you want to make a good margin in that, so you're willing to pay 8%. So start talking to people, making them aware of what you do, how you do it, how it benefits them, the security you can offer them, and offer them that 8% return. As I said at the start, you might miss out on that opportunity, especially how fast the property market is moving. But then you can proactively talk to people knowing that if you get the money and they agree to it, you can get that in legals to secure the finance and you can buy your first property. I recommend a slow growth mentality with this. Go through the one property, understand the end-to-end process, and then start drumming it up. And if you follow that process for the next couple of years, it's very likely you'll have over £1 million portfolio based on other people's money. But it is slow growth, it is not get rich quick. The other option, option number 2, is to go down the active income stream. And my favorite active income stream is deal packaging. And what this is essentially acting as a estate agent, but instead of representing the person selling the property, the vendor, you represent the buyer or investor of the property. So the reason this is great from a complete zero experience point of view is you are generating the experience of dealing with estate agents, letting agents, build teams, solicitors, brokers, insurance, all the way through, and of course anything to do with the property in terms of the offers, negotiation, etc., and the ongoing liability, without any ongoing liability. Instead, an investor will pay you money. Typically these are accountants, dentists, doctors, lawyers, marketers, whatever it is, executives that live in London or wherever they are in the world, where they're working hard for their money, but they don't have their money working hard for them. This is where you come in. So what they'll do is they'll pay you a fee. We take a fee up front, and for that fee, that retainer, you go out there and find a property that matches their criteria. And then once you're doing this active income stream puts a load of money in your pocket. I charge £6,500 plus VAT per property, and my strategy is I package 5 and I buy the 6th. So this way I'm able to actively build my income stream while having great relationships with investors, great relationships with vendors, great relationships with estate agents, and have a continuous flow of property where I can carry on packaging and buying. Now the great thing with this is that then I can supplement it because of my newfound confidence. Not only am I building my cash pot, but I'm also building the confidence that my investors have in me. So say I get a great property, but I don't want to package it on and I don't have quite enough cash, I can go to said investors and say, hey look, I'm 30 grand shy on this, I'd be happy to pay you 10% on it, would you like to supplement that to me for the next 6 months, knowing that I can pay them back from the deals coming in. So is it easy? Absolutely not, but there is a simple step-by-step process that if you want to find out more, you want to subscribe to this channel, hit the like and leave a comment below so we can go in so much more detail. If you did get value, let me know in the comments, and if you didn't, let me know in the comments as well. Hopefully you did. Go passive, go active, but certainly play the long game. I'll see you in the next video.